Hey, good morning, everybody. Sorry for the slight delay. My mouse stopped working, so I tried to find a mouse. It's a double A. Only hey, good morning, everybody. Sorry for the slight delay. My mouse stopped working, so I tried to find a mouse. It's a double A. Only hey, good morning, everybody. Sorry for the slight delay. My mouse stopped working, so I tried to find a mouse. It's a double A. Only good morning, everybody. Sorry for the slight delay. How funny. How funny. Echo, 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 echo. Hey, yeah, it's a tough morning. Tough crowd, tough morning. Anyway, so my mouse is dead. I've been up all night, all this kind of stuff. I apologize, but it is 7:36 in the morning. It's Tuesday. Echo, echo, echo. Oh, well. We all have to have challenges, right? It's 7:30 in the morning. What is it? It's like the 16th, isn't it? Yeah, Tuesday, October 16th, 2018. Another awesome day to be alive. Another awesome day to be a currency trader. We have lots to be grateful for, lots to be thankful for. I am grateful that you're with me here today and every day. I appreciate all the effort you put in. So let's go. So, g'day, mate. Shall I throw a pip on the barbie for you? Ripper. So anyways, hey, welcome to the Forex.Today YouTube channel. Make sure that you subscribe, right here, I believe it is. Now, why would you want to do that? Well, when I go over there and I click the stream button, I'm like, boom, stream. Your phone or your email goes, boom, we're streaming. And if you happen to be available and all that kind of stuff, you're like, yeah, I think I'd like to join that webinar. And you go, bloop, and it brings you right into the webinar. Easy peasy lemon squeezy. Thank you for the likes that you give. I appreciate that. Not only does it make me feel good inside, but it makes sure that I cover the right type of topics. And I do see comments below on yesterday's video. One of the comments said, hey, Wayne, could you cover gold? So I apologize if I didn't cover gold yesterday. Also, someone left a comment yesterday, like, it was really unprofessional of me to make fun of the Europeans and call them socialist pig dogs and laugh at the British for not having any productivity whatsoever. Yeah, you're right. So I apologize for that. There's no need. So, yeah, so I apologize. So thank you for leaving the comments anyways. By the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Please visit TradersWay.com and open up an account today. We'd like to be the prime broker for your successful Forex trading business. So please give us an opportunity to earn it. With that in mind, let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. Cool. Buenos dias, Kevin Starr. Jim says, yeah, when you subscribe, click on the little bell thing. That's the thing that gives you the notifications. So a dead mouse today, yada, yada, yada. So lots going on. So we got to do some currency trading. Should be another good opportunity for us to go through the charts together as a team. Come up with some trade plans, review what we've had. So we have a request yesterday in the comments section under yesterday's video for gold. Is there anything else you would like me to cover today? If so, please type it in the chat, and I will do my best to get to that. And without further ado, I will just dive right into WTI since this is exactly where we left off yesterday. Now, yesterday, we had this in the situation of, hey, we have a weekly central pivot here, and we're in a scenario of lower low, lower high, lower low. Maybe it'll create a lower high. And if that is your trade plan, then there are two tactics. One, you could potentially short here at the weekly central pivot, which is also the 4-hour 21. Okay, and the second would be a little bit higher. It's a role reversal, monthly M3, weekly M3. So that's a really good plan B. And so far, plan A is working out. Have we made a new lower low yet? No, but looks okay so far. Okay, so again, pretty easy. Look how it was before. Higher high, higher low, 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 higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, so on and so forth. Cool, right? So we'll see where that happens. And then, of course, if you're a bull, where would you want this to head back up? Well, find your support, and there's like something here, there's something there, bring it across, and maybe this is bullish for you, right? Okay, and it could be, and we discussed that yesterday. So if you're a bull, you want to start buying it low, and you're pretty low now. I got trades in low places. Okay. Okay. Okay, Kenneth Starr. Okay. And that you can see bottom, 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 but that's also M2. Okay, that shouldn't be news to you, right? That shouldn't be news to you now. It's Tuesday, right? Where the euro drowns and my trade chases the Swissy away. And you're saying, let me pull that out. 69, 69, 05, 16. Yeah, well, down to S, Brady. Well, actually, I would draw it differently. Down to the S1 is okay, but it's not a real target unless it's an inside. And I guess that's what you're going for from before our previous conversation. Yeah, let me put it back. Yeah, down to 69, which is an S1 off the R1 up in here. Yeah, sure. Yeah. Cool. Good call. WTI, so let's get into the XAU. Okay. So we've done some analysis here. What do you think of this idea of bottom, bottom, bottom break? Well, it finally broke out. Okay, nice. Didn't get a big pullback. Let's change the time frame. Okay, so if this was your higher end, let me try to grab some of these Reese's Pieces. There. Okay. What do you think? You gonna buy dips? Okay. Just mark up your chart. Just doing my job. Identify support and resistance. Again. Right? Just doing my daily do dilly. That gets us here. So we kind of already had that as the break. Cool. So like no real surprises, right? No real shockers. So now what? Probably up to resistance, probably down to support, probably up to resistance, probably down to support, probably up to resistance, probably down to support, up to resistance. Frank, it's in the description of the video right now, but let me get you a link to the chart templates. By the way, I tested them yesterday using Chrome, so a lot of people said, oh, it's not coming with Chrome. I tested yesterday with Chrome, and it works. But I've hired a new programmer, and they're going to rebuild the entire thing from scratch. But something tells me it ain't Chrome that's blocking some of you guys. But anyways, there you go, Frankie boy. That's how you get it. Yeah, and Panka Chawla says, I am struck. So there's like 25 people somehow, somewhere got put onto some list that has nothing to do with this. And the programmer's gone back through the process. I cannot figure how you guys did that. Yeah, probably, Jimbo. I don't know how you got to that spot, right? Yeah, it probably just says you're getting to some other random thing. So I got to figure that out too. I don't know how you guys did that. I'm putting my mouse on every page, trying to find a link somewhere. I don't know how you got to that. But anyways. Yeah, the OCO sucks. I grabbed the wrong file. So I'm going to update that soon. So I will fix that for you as well. No, the right one's not there, so Kenny. So hang on, guys. Yeah. Okay, cool. That's all. So what do we do now with gold? The problem is, I'm not very excited about gold, so it's hard to get some serious analysis out of me on it because I don't want it. So all I can really tell you is there's the resistance. That's probably where you should take profit on this, and maybe look for an unwind, and probably just come back here and just the ebb and flow between support and resistance. Okay. Yeah, Brooke, that would be the same. Yeah. I think that's in the scalping course on how to trade gaps. All right. So anyways, not a lot of solid analysis there, guys. It's just there's support and resistance. We're not on support. We're not on resistance, so I wouldn't trade it if I were me. I think it should go a little higher, and then it'll probably come back. Right? So that's all. Just make sure whatever you're doing, you're either at clear support or clear resistance, right? Yeah, Harley, oh, you know what? I just closed the windows too. I was just there. Like I said, I've checked 3 emails. You know what? I bet you I have it on my phone. Let me show you. Let's see if I can quickly find it. All inboxes. So I have this email. Where is it? Your Forex chart setup files are now ready for download. Okay. Right? Where is it? Right? So I click here. I guess I can do it this way now. There's my mouse. And you get to a page like this, and there's the video. Okay. Okay, there's the video. And it says download your files. I mean, there's nothing else. That's the whole page. So there's a video on how to install. This is a quick video on how to install all the indicators that you just downloaded. There's indicators, there's an EA, there's pivot points, there's chart templates, there's profile templates, and everything that you need to turn something that looks like this into something that you're more familiar with that I use every single day. So this is probably something. Where's the button? Watch this. Download your files. I've never done it on my phone before, actually, so I don't know what it'll do. Yeah, there. See? Downloaded. Forex Trader Toolkit I mean, it's right there. I don't know what the problem is, right? So, anyways, let's move on.com, guys. It should work, but I'm going to spend a lot of money to redo it for some people. All right. All right, so where are we in the move? You always have to ask yourself, where are we in the move, right? Because we're talking about a flow here. Oh, let me get back to here. We're talking about a flow. Yeah, maybe. I don't know. I know a lot of these people, though, Kevin, so they're good people. That's why I'm taking a lot of time and spending actually quite a bit of money to fix it for them. Right, Harley, and that's what I'm trying to figure out. So do it again. Harley, just do it again for me and pay attention to every answer that you give. And if you get to that same spot where it just gives you like a gray page and says you've been subscribed, figure out how you do it, because I cannot figure out how 25 people got to that page. I cannot figure it out. So please do it again, okay? And where your mouse on the pages, I want to know what button you clicked, that kind of stuff, because it's radically different from everybody else, and I don't know how it gets there. So, right, so please do that, right? Yeah, the glitch in the matrix. So anyways, I won't give up on you guys. All right. So anyways, where are we in the move? And there's more to that than just support and resistance. So what I'm kind of looking at is if we're here, okay, if this is the top of our current month, what's the projected bottom for our current month? Yeah, see, I don't think there's a big white button on the bottom, so make sure what big white button? You guys freaked me out, Ronald. What big white button? Yeah, so Harley, redo it and help me figure it out, okay? Okay, S1, thank you. Right. Okay, and that's kind of where we are now. It's not quite perfect. So what do you want to do the rest of the month where the logical kind of process has occurred? And I get concerned that there's nothing left. Oops, why did that drop? Sorry, I'm using a trackpad with my thumb and my finger. Weird, huh? Okay. So, like this logical move, I mean, that looks like support and resistance to me. And so even though you might be on this chart and you're like, Wayne, get me into a trade. Wayne, get me into a trade. What should I be doing? How do we trade this? Well, the first thing I think of on this time frame is like whatever was supposed to happen kind of happened, right? Right? So now I'm like, yeah, I'm not super excited about trading more because the logic, the move has happened. Okay, great. So now let's try to squeeze something in there. If you were using a basic pivot point strategy, then you would be looking to sell this line. You know, even there, I'm not even convinced that that's what's in play, right? And then this gray line tells us that the trade is sort of mediocrity anyways. It's not a decent pivot. Yeah, it is a pivot, but it's not the right pivot. Okay? So the whole thing is sort of meh. Now, what if I was a bull and it dropped down into here? Well, I've identified this big fat gray area as support, but I also know that this is support, and it's a psychological level, and it's a little bit more important of a pivot. So let me mark this. This is important to me as a bull, not as a bear, as a bull. Okay. Then this is important to me because it's a psych level. Okay. Then this is important to me because it's a monthly pivot and it's a support pivot, right? So I could just take that whole thing and say, you know what, somewhere around here, if price actually fell, I'd be a modest buyer. Okay? And I'd just play it like it's back into the zone, retest, and then I'd keep my stop close or whatever. And it'd be like, again, sort of a meh trade. Like, I'm not going to retire on that trade. I'm not going to put big money on the trade. I'm probably not even going to follow up the trade that much. But that is more support. You know, the other thing is, if you were a swing trader, on Sunday you would have bought this, correct? So you're already in, and you should already know that even though you're already in and you're already profitable, it's still pretty mediocre. So like, what do you do now, a day after, 24 hours after you were supposed to buy it? Now what do? I kind of look at this and say, I don't know what you do if you're 24 hours late. Probably nothing, right? All right, trader. Trader J, whatever your name is, you are going to be banned forever. And he's gone. Wow, I just banned somebody forever. All right, cool. All right, so that's interesting, right? So yeah, be careful, right? Make sure every trade is not just quantified but qualified. Is it a good trade? Is that really what you want to be doing? So let's kind of repeat that process with Piggy. Piggy's different, right? So do you remember, gee whiz, like 2 weeks ago, 2.5 weeks ago? What was he doing? He was promoting his own YouTube channel because he apparently can't develop his own following or something. But I found it very distracting and quite unprofessional and rude. He might be the first person ever banned. But anyways, check this out. This goes back to, 16 days ago, right? And we said, well, the general trade plan for the month of October is up into here, right? How many people recall this? The hardcore analysis, we said, somewhere in here. And then we said, based on that, it would be somewhere up there. Okay? Okay? So that's kind of what I was saying on the other trade is like, all right, before we even talk about the 15-minute chart, okay, where are we going? That's the most important thing. So it's not that it worked well. I'm not talking about the monthly swing. Like you should already have that. We analyzed it. We put it together. I'm assuming you're already on it, making money on that. I'm just reminding us, where are we going? Like you don't just jump on a train and then every day think, well, which stop should I get off? Which stop should I get on? Well, where are you going? You can't just randomly get on and off trains until you get somewhere, right? So anyways, under this strategy, we believe we're going from here to there. That's the direction. Okay, cool. Now on a smaller time frame, which train do you hop on and at what time do you hop on it? What time do you hop off? When do you change tracks? But you need to know, like, all right, I'm trying to get from Atlanta to Seattle, right? And, we got to go places first, right? And where do you change trains and all this kind of stuff? You can't blindly do it. So in this case, now we know where we're going. So now on a 15-minute chart, what do you do? Okay. So what is the plan? Well, once again, another very basic trade strategy is, Sunday morning when the market opened, if you were a bull, and by the way, are you a bull? Well, if you bought it down here and you bought it here, like, let's go back even further. This was the monthly buy zone, okay? The following week, which was 10 days ago, this was the buy zone. Well, why was it a buy zone? Because you were a bull. So what's the buy zone? Right there. Where did it go? It hit our target. Like, perfect. Boom, boom. Okay, great. So you were a bull 2 weeks ago. Then you were a bull last week. So what's the likelihood you're a bull this week? Well, probably should be pretty high. And based on that bullishness, what is the best pivot in the entire world to buy? If you were hoping all weekend to get one pivot, what is the best pivot you could possibly hope for? Oh, that one right there. Prayers answered. Boom. Long and gone. Which is the same as this. No, this isn't it, but this was part of the bigger buy, right? So look, you bought it at the M2, you bought it at the M2, you bought it at the M2. Winner, 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 chicken dinner. Or steak dinner. Steak dinner with lobster. Actually, yesterday I had steak with shrimp. And then the day before, I had buffalo ribeye Delmonico cut. Buffalo, a bison ribeye. Right? Chicken, 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 buffalo dinner. Or sorry, winner, 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 buffalo dinner. Boom, boom, boom. M2, M2, M2. Don't need to be a rocket surgeon, right? So if you don't need to be a rocket surgeon, what do you need? Well, a basic trade plan. Like, that's not a complicated trade plan, right? And I'm not trying to insult you and all this kind of stuff. I'm trying to drive it home that a little bit of analysis can go a very, very long way. You start with the higher time frame. And you ask the amazing question, where are we going for the month of October? Because how about this? You can answer it differently. How about a different question? In the month of October, do you expect the pound to be bullish or bearish? And then from there, whatever your answer is, you can then put together trade plans to trade. So what if I got this entirely wrong? I didn't, but let's say I did. Let's say I said I was a bear. Okay? Let's redo this whole thing. I woke up on September 31st and I said, you know what? I want to be a bear because of the which way the wind blows. Okay? So I got this one wrong, but let's plan it. Okay. I'm a bear now. Where do I want to sell on the first day of the month? Well, the first day of the month is there, and I want to be short somewhere in here. Okay? I would have looked left, and I would have saw this, 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 and this. Okay, great. So somewhere in here, maybe off the 4-hour 21, I would have sold. Okay? And I almost hit this next pivot down there. So quick analysis tells me I was correct about 200 pips profit. And then it fell apart. Well, you know, a higher high kills all bears, right? You see what I mean? So I would have been stopped out in this area. And that's that. But let's say I'm a stubborn bear. Okay? I'm stubborn. And I say, well, this high is still lower than that high, right? Brew. Let's say I marked it like this. Okay? And I say, well, I'm still a bear. Oh, Brexit, right? Great. So what pivot would I want to sell? Oh, I'd want to sell it here based on my strategy. It's an M3, but it's also that old role reversal. So I'm going to sell it again. And my expectation for this trade is that it's going to be down here. But once again, I'm wrong. And I'm knocked out. Again, probably break even because I sold at M3 when? Sunday morning. Or sorry, Sunday afternoon. Why? Because that's exactly when I'm supposed to be swing trading, right? Maybe I front ran it on Sunday, but in this case, it was only up 96.3 pips, potential profit. So 100 pips. So this one I was potentially profitable 200 pips and was wrong. This one I was potentially profitable 100 pips and was wrong. Okay? And then what about this next one? Well, you can, this is called stop hunting. That's a potential counter trend trade setup that I teach. It's called, it's not front running, it's stop hunting. Okay. And then what about Monday? Yeah, you might have shorted in there if you were trying to sort of a gap fill type scenario. Which is not my favorite type of thing, but it can be done, and you put it all together, and it was 4 hours, so you had plenty of time, and you try to put it together, and then that failed. Why? Because your bias is wrong. But this happens a lot, guys. You can't always be right, but you need to trade with a bias, so your strategy might be wrong, but you have kick-ass tactics. Right? You get it? And because of that, you either lose a little bit of money, break even, or make some money, but you're wrong in either way. And of course, you're mature enough not to ever have terrible losses, right? So you either lose a little bit, you break even, or you make a little bit, and you're wrong. Okay, and on the long run, what happens? Break-evens are break-evens. They don't make any money. Then you have a little, small winners and small losers, which wash each other out. So at the end of the year, your 200 trades that are wrong, your 200 losing trades, or let's say your 200 not winning trades, didn't cost you anything. You have a whole bunch of small winners, a whole bunch of small losers, and a ginormous pile of break-evens. And what's left? Well, all your winners. You see what I mean? Yeah, well, and as Steve points out, finding the support and resistance is key. But knowing if you're a seller at resistance or a buyer at support, some people try to do both, and I bet you on the long run they're not that successful. What you need is be able to do one really, really well and trade with a bias and line up your tactics with your strategy and do that very well for the course of, let's say, 5 years. And after 5 years of you just like trading your bias and you're wicked sharp at, if you're a bear, selling at resistance. And then when you're bear selling at resistance and it's moving up, you're conservative. But if you're a bear selling at resistance and it's moving down, you're super aggressive. Now you're getting A-game kind of stuff. And then if you want to swing both ways, like a broken gate where you're buying low, and right, and you're thinking you're buying your short-term long but long-term short, so you're mixing strategies with time frames, and you can get there, and you can be super good both ways. I wouldn't even try until you can be profitable for 5 years. Right? See what I mean? That's what you need to do. Why don't you open till now? Well, it's approximately London lunch. That's why we do it. Okay. Yeah. Well, so yeah, Lewis says correct. He's back tested this for 6 months on data, and yeah. But it's more of a skill. Like, don't worry about back testing. But it's nice that now you know what I'm preaching, I guess, right? But now the next thing to do is get really, really good at entering trades based on your strategy. And that means tactically, you're good at identifying short-term support and resistance. You're analyzing the market too, right? Like if you're a bear, you have to say, well, is the market bearish now too? Is it aggressively bearish? Is it like, for example, lower low, lower high, lower low? Now you can be aggressive on the next lower high because now you confirm the market is bearish and you're bearish and everybody's bearish and everything is bearish. So sell it hard. But as soon as you get the higher high, you're like, well, I think this still might be an upward channel. Yeah, but be conservative, bro. Okay. Oh, you use your day charts for like this to do SNR? Yeah, that's fine. But the thing is, I find that if you're looking at it on this day chart like this, I don't know how far you back out, but since I'm using weekly and monthly pivots, I usually have all that kind of stuff anyways, right? Like it's usually there in the math of the pivots, right? So you can go in and refine a little bit, but usually like my weeklies, monthlies, they usually have everything covered. Not always, but usually. So I'm usually like at that point, I'm looking at things on these smaller time frames, right? But just in case, just for clarity here, if you're a bull, this is the exact pivot you wanted to buy, and this is your exact target. That's your conservative target. And your aggressive target is here. Okay. Oops. Okay. And that's all it is. Okay. Just, it's buying a dip. And there we go. And so once you've made these decisions, like, is it moving up? Where are we going? Is it going up on the weekly? Is it going up on the monthly? So buying a dip like that, it's not complicated. Now, Steve says it takes practice. Oh, yeah, it takes practice. But it's not complicated. It's not like sitting down and figuring out calculus. You know? So I took a macroeconomics class at Harvard last semester, and it was intense as far as the amount of calculus was concerned. And I don't know calculus, so I had to like figure out calculus. And I'm not the math guy or something, right? So that wouldn't come easy for me. So I look at, looking when comparing that to the brain power required to say, all right, on this time frame. That's the wrong one. Let's do, where's that pound? I like that pound. Okay. The brain power it takes to say, On this 4 hour, it seems to be going up. Right? So let me redo my analysis. Come on now, where's my pointy? Okay, where I say, okay, it was low, and then it made a higher high, then it made a higher low, then it made a higher high. I wonder if it'll make a higher low. Okay, that's the whole thought process, right? And then I say to myself, well, where on the chart would I like to buy this if I believe it's bullish, and then this retracement on Friday is just simply creating a higher low? Like, where on the chart would I like to buy it Monday morning or Sunday afternoon, right? And it'd be somewhere between that price and that price. And of course, it opens up at exactly the price I want. I'm like, oh, snap, I buy it. It's not a lot of brain power. It's not figuring out calculus on your own, right? To figure out the growth model, or the slope of the potential GDP line over blah, 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 you know. No, I think you can do this. But where people fall apart is one of two things. They might have the wrong bias, and don't beat yourself up about that. Because the biases change, right? Like, it may be bullish now and you're a bear. That's cool. But just, you're supposed to do analysis now, not to figure out what the market's doing so you can do that. That's what a losing trader does, by the way. Okay? Now, ask yourself, is that the questions you're asking? What's the market doing now so I can do that? That's the wrong question. Okay? You need to start the other way. Like, you might say, okay, I'm a bear. And then you look at this and you analyze the market and you're like, oh, the market's not bearish at the moment. Therefore, I should be cautious. Therefore, I can wait for a reversal until it turns bearish. And if so, what are the likely prices for that to happen? Or if I were to sell, where is the next resistance? And should I take that on the small time frame? Where would a reversal pattern be? And all this kind of stuff. But you're not asking the charts to give you answers. You have the answer, and then you're analyzing the charts to make decisions. Completely different from each other, right? And that's where I want you to get. So you might say you're a bear on this because of Brexit, and you're just certain. And the Fed's raising interest rates, right? So you're like, you could totally be a bull on the US dollar. You could totally be a bear on the Great British Pound. But buying at the weekly M3 on a dip in a 3-week uptrend would, buying here is obvious. Selling there would be foolish, right? So you could ask yourself, well, if I'm a bear, where would I like to sell in this situation? You back out and you're like, oh, well, one thing I can consider here is a double top. Okay, so you set that up like, okay, I wonder what happens if we hit a double top. Will I get a reversal pattern? Okay, in that case, you're going to say, well, I wouldn't be shocked if we kind of get a little bit of an Arctic turtle here. We stretch our neck out, we hit the weekly, and then it comes back under the monthly, and then now we're going to play the monthly, the weekly off the double top. So therefore, if it comes up, and then that holds as resistance, creating a lower high, now I'm going to sell. I'm going to fire it for effect. Boom, boom, boom. Take it down to Chinatown or something, right? But, that's just a solid trade plan. That's called trade planning. You're not reacting to the market. You're just setting up the next high. Hey, right? Okay. Well, that's what they are, Jimbo. A 2155 cross represents a change in the market. Okay? Right, that's what it is. Kenny says, Wayne, tell me if I'm wrong, but I made some research and the chart indicator will provide you the same information as. Oh, no. I'm talking about like growth models of economies and stuff. I'm talking about macroeconomics, not about trading. Okay. Thank you, RC. Sure, Luis. Yeah, let's do CAD first, just because it's collapsing on me. Okay. All right, so maybe this is a great example of being wrong. Okay. So on the shorter term, we were playing like, look at even the short term, right? Obvious support, higher high, roll reversal breakout type strategy, higher high, higher low, higher high, higher low, higher high, higher low, double top, right? So this is a consolidation, breakout, consolidation, 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 lower low, lower high, lower low. Okay, so it was going well for a while, and then looks like may have failed. Okay, do they fail at logical places? Well, let me ask you, is it, let's say, somewhat predictable that the price stops up here? How predictable is it? Like 10 out of 10, 5 out of 10, 1 out of 10, 1 meaning not predictable at all, 10 meaning absolutely, totally, 100% of the time will work. Like, how predictable are we talking this weekly M4 being toppish? Did I even ask that in a clear fashion? Probably not. How predictable is a weekly M4 at a psychological level of 131? No, I guess it's not even a psych level. I guess that's 130.66, so not that big of a deal. Robbie says, yeah, probably 80% chance that that M4 is going to be a weekly. Okay. Yeah, I'd go with that. I might even say higher than that, but yeah, that's about right. It's not 100, but yeah, you're right. Probably not quite 90, but 80 to 85, right? 8.5. Cool. Okay. And then if you were weekly swinging it, we know this is our weekly sell zone if you're a bear. Now, you wouldn't have sold it here, but after all of that, you might have sold it there. Frank says, I use pure support and resistance. That is support and resistance, Frank. The difference is if you're using a pure naked chart, that you're only using support and resistance of price and you're not using support and resistance of the market. I would have told you with fair certainty, 85% certainty, that if we found ourselves bullish and heading up, that at 130.66, I would get out of the trade. Why? Because it's resistance. And you'll say, well, what resistance? We haven't done it yet. And I'm like, oh, no, not price resistance, market resistance. And by the way, I didn't even mention that was monthly M3. So like that is so obviously resistance that be negligent not to respond to it. So even a bull should take profit there because we know gone, reconnection successful. All right. So I think you're back now. So I'll just keep going. So we have this confluence within 4 pips. We know that we found a price in which support and resistance should take bulls out of the market. And we know we have a price in which bears should actually sell. They're different, but put them together is quite reasonable to see price action like this. Okay. And now with this plan A, look, by the way, look at plan A for this week. Plan A was to buy it here and have it go up. Plan A worked for a bit, right? If you bought it Sunday afternoon, by Monday morning you were up. It was up 40 something pips before you got knocked out. And then what? How do you treat this if you were a bear, but you missed the initial setup? You missed the double top. You missed the lower high. You missed the swing trade. At what point do you wake up and smell the concrete? Well, I hope you get the breakout, for crying out loud, right? I mean, it's the second chance breakout. Technically, this is actually the breakout. Double top, lower low, lower high, swing trade, lower low, lower high. Like, at some point, you're on the glue train, right? And you got it. Not terribly difficult, but it's difficult if you're making it up here versus having a thought process and analyze something ahead of time. So, why don't you today write down the direction you want to trade, whatever pair. This is USD CAD. It could be pound, dollar. It could be euro, dollar. It could be euro, yen, Aussie yen, euro, kiwi. I don't care. Pick one pair and then write down on a piece of paper with a big, fat, felt tip marker, a real stinky one too, the one that stinks up the whole room, right? The kind that leaves like oil stains around if you write too slow, okay? And write down, Euro, Kiwi, bull in huge letters, and then put it up on the wall in front of you. And that's what you're going to do for between now and the end of the year, till December 31st. Now, you can trade other things, but on that one thing, that's all you're allowed to do. So if it says Euro Swissy bull or Euro Kiwi bull, you open up that chart, and the first thing you say is the market bullish or not bullish? Oh, you guys are still gone? You guys, wow. I can't type, man. You got good. You guys still don't have me? Yeah. All right, well, some people are still complaining. Oh, Luis Garcia's already got that. All right, good. Thank you. Thank you, guys. Appreciate that. Anyone can see. All right, cool. So, so you open your chart. Does the market agree with my analysis? You don't care what you see. If the market disagrees with you, you don't care. You just don't trade that. You're like, you know what? I don't want any of that. And you wait. But you don't wait like numb. You're not just numb. You say, all right, if I'm a bull and the market's bearish, where would the market possibly turn bullish? And you look for levels of support. And then what kind of patterns do you want to see near or at, preferably exactly at, those prices? Well, like reversal patterns. Cool. So you mark those down, and you then wait for price to come down, or market come down to your price, and then you wait for the price action that you want to see, and then when you get what you want to see, you take the shot. And if the market doesn't giveth, you take a walk. Because you're the one in control. You're the one making decisions. Okay? And amateurs just chase price. They're just chasing, I guess I'm supposed to be bearish now. All right, good, fine. Okay. Right? All right, so let's do some yen-yens. Yen-yen. What is the time? Yeah, we don't have much time, so let's do the last 15 minutes of yen-yen. Okay? Cool. So we're sellers. There's our target. We're 3/4 of the way there. Done. You're like, what do you mean, Wayne? Well, look, we've been selling since 15. and our short-term target is here. Our longer-term target is significantly lower, but I have my doubts. Okay? But this is the, I guess, look, let's update this, because this was if you were, so I need to make sure that you guys are looking at it right, because this is, oops. I don't know how we're going to do this. This was the plan, and it's always been the plan. That was it if you were a bull, but anyways. Okay, and then you're playing the head and shoulders too, right? So if we break the neckline, the aggressive target is way down here. I would be super happy just get it here. Okay, but whatever. That hasn't changed. That's easy peasy lemon squeezy. Okay, easy. Okay. Okay. This is a tougher one. Okay. On the first day of the month, my true love gave to me. We were supposed to hit that as a target. We were supposed to hit 72. I'm sorry, it only went to 72.33. So we were 4 pips off here and 33 pips off there. Sorry. So now what do? It's less good because I like to hit our targets. But if you were analyzing the market, could you possibly say to yourself that this seems to be a head and shoulders pattern? La 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 la. La, 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 la. Now we've run into a cluster here. We have a monthly pivot and a weekly pivot. Okay. Yeah, are they that important? Well, after we've done the big move, they're less important. Okay. Jimbo says, a little help from the Kiwi CPI and stuff. Yeah, you know what? It's so amazing that all these things come out way after the fact. So I was telling you in March and April and May and June and July and August, that these things would occur. Now, Kiwi's been the toughest. But besides all this CPI, let's just get past that. Oh, the Kiwi CPI. Really? Or was it just the fact that it was a triple bottom? What really happened? Oh, well, the guy on CNBC said blah, 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 blah. Oh, yeah? How interesting. Right? I mean, just look at that. I mean, come on. Okay? Right? Come on. Come on. Come on. Even superseded our weekly pivots, right? So now what? Well, if you ignored the triple bottom and you ignored the inverse head and shoulders, what more am I possibly supposed to say? Right? What do I say now? Well, this is a terrible place to buy. How about that? So should you be a bear? Well, I never said that either. Okay. Okay. Triple bottom is a pretty good place to buy. An inverse head and shoulders, you're supposed to buy off the right shoulder. And there's a pretty good chance I had that marked for you too. Then what? A break of the neckline? I guess you could try for a breakout off of that. But, this is so late. It's so late. I mean, I don't know what more to do with it, right? Wait for pullbacks, I suppose. But even then, you're supposed to be in here, in there. So, yeah, I guess what will it do? Come down like this, and then maybe... So let's move it. So what is this? You hit this. You get the pullback. and then maybe next week you're like this, up to that level. Yeah, okay. Yeah. Right, Chris? So something like that. Which means basically you do nothing for the next 3 days. So, yeah, okay. But once again, let me pull this up one more time. One last second. You're not going to make a career of trading this. In fact, I think a lot of people are going to lose money because they're going to keep buying it because now it's clearly going up. But, you're supposed to be buying at support. This ain't support no matter how you look at it. So it's going to go up for a day, maybe 2 days, and then it'll come down. And everyone chasing price is going to buy it late, and then they're going to sell it late, and then they're going to, just a lot of people are going to lose money in here. And because they become aggressive after the fact, and now they're aggressive up at targets, but they were not aggressive down at support. In fact, they were probably aggressively bearish down at support because, once again, they're late. So it's like, well, you could have been aggressive here, and I get that being aggressive is not necessarily good. 100% retracement sets up the inverse head and shoulders. I mean, that's how head and shoulders form. So that should be fairly easy to buy a shoulder. It's also a weekly swing trade on Sunday and Monday. So once again, that's easy. What do you do now? I don't know what you do now except lose money, right? Right? Wayne, it is tough to buy lower lows. What? Am I missing something here? Let me check it. Is it? Well, this is your buy zone. Let me just put a circle shape. All right, so Sunday afternoon, the market opens, and you're here. That's not hard to buy, right? Right? I mean, this is like 90% of what I do. Right? This is like what the swing trading group and I do. This kind of stuff. Like, this is the career, right? Where you're buying at support. In this case, it's the market's opening. It's Sunday afternoon. It's 5:30, 6 o'clock in the afternoon on Sunday, and you're right in your swing trade, and you buy it, and you drop a stop, and you walk away, and Monday morning comes by, and you're up 125 pips, and you've worked a whole hour for the week, and you're approaching your target, and you're like, damn, it's Tuesday, and I made my 150 pips, and then you're done. Like, what do you do on Tuesday when you're up here? Are any of my swing traders here, by the way? I'll let them answer. What do you do when it's Tuesday, you open up your charts, you're slamming into your target, you're up 150 pips, and it's a Tuesday? What are you taught to do? The answer is not sell. Yeah, well, Jim was right. Go to the museum, right? Well, you can counter trend. That's similar to sell. You don't have to. But what do you have to do? Exit and take profit. Okay, Jim's comment got blocked. Hold that shot. No, not hold it. No, take profit. Okay, now you can, if you want to, you have permission to consider counter trend trading only in this example, in particular on a Monday or Tuesday. Wednesdays are is how I describe it. Thursdays, yet. Tuesdays, yeah, if you want to. But you don't need it, so someone else said go to the museum, right? Well, that's why I say, why don't you just take your profit, take the rest of the week off. Good job. You analyze the market on Friday, Saturday, or Sunday. You analyzed that there was a potential for a 150 pip move. The market opened, you took the trade. 24 hours later, you're up to 150, but you've analyzed it as being worth 150. So you take the profit, and now what do you do with the rest of the week? Well, you're done. You analyze the weekly move, and you're like, I think this week is going to move 150 pips. Who cares how long it takes? You're done. You're best off just walking away. Enjoy the week. Hey, see you Monday. So that's what's taught, guys. So like when someone says, well, what do we do now? Now we're up here, you know, what do we, besides take profit and go to a museum or go visit old folks in the old folks home and listen to stories about the war and the Depression and, you know, take a kitten with you. They love it. Very tactile. Good for the old people, right? But besides that, trade mediocrity for 3 days, right? This is where you're supposed to make your money, bro. This down here. This is super aggressive, but it's a triple bottom going back 6 months. It's not that crazy. But let's say you're ultra conservative, and I appreciate that. Great. 100% retracement. Oh, well, that's an inverse head and shoulders, right? That should be automatic. 100% retracement. Right? So then you look left, drag that across. Oh, right in your pivot zone. Oh, right Sunday morning. Right? And of course, I'm sure you guys know I want yen pairs to go up. Okay? Really? Feed down. Oh, well, for some, other people, it's fine. Interesting, right? All right, so pick a pair, any pair. Aussie's kind of the same as Kiwi, maybe not as aggressive, but, you know, it's all right. You can see the first day of the month it was supposed to fall, and it fell. Okay. What do you do now? We didn't get our target. It concerns me now. So we're starting to consolidate. But, you know, what do you do now is a tougher question than what were you supposed to do? And just like we talked before, you know, an analyst looking at medium term charts like 4 hour and daily charts would predict that's a sell price. And they would also predict if you sold there, your target would be down here. And of course it didn't draw it for some reason. Let's try it again. So it didn't quite work. So what do you do now with sort of a, I don't know if you would call it a failed trade plan. There we go. I don't know if you call that a failed trade plan, but the fact that it didn't hit it increases your risk, I think is what I'm saying, right? Okay. So increased risk. You can try to answer it like, where's this stoppage coming from? Okay. Is it forming a giant double bottom? Could be, right? Okay. So you should be asking yourself questions like, what do you want to happen between now and the end of the year? Okay? Because if you're not sure, which means you don't have a bias, you might find yourself uneasy about this whole move, and by December find that we're up here. Okay? And you might like sell here, sell here, sell here, sell here, sell here, and then find us up here. And now you're like, oh, now I should be buying. Okay. So take yourself out of the now. What are you going to treat this like a double bottom essentially? What does it mean that we didn't hit the bearish target? What does it mean? You know, is it an S1 sort of R1 week? So bears did exactly what they were supposed to do. And so far, they haven't been able to hit target. Now, if you're still a bear and you sold the top like you were supposed to, can you sell this? Oh, for sure. That's why I have it marked up, right? These are sell zones, right? So, right? But if these sell zones fail, what does it mean for bulls, right? So you need to kind of think like, all right, if those sell zones fail, are you going to buy a dip like this and start tiptoeing your way up? Right? Where do you think you're going to be? Where do you think we're going to be at the end of the month? And that's going to be fundamentally related. That's going to be cyclically related, all that kind of stuff. It won't be technically driven. Okay? So put that together and enjoy it. I think someone asked for euro yen. Let's do pound yen, then euro yen, and then we got a day here. All right. So I don't know how far back this trade plan was, but we analyzed the resistance, and we have what? Plan A and plan B. And it kind of worked, and then it's kind of just gone back into the trade zone. It's a little dangerous, though. You notice how the central held? That's bullish. Okay. And of course, I want this to go up. I hope you appreciate that, right? But we just simply have this marked as support and resistance. Okay, that's all we've done. And on a monthly basis, guys, on a monthly basis, this is the buy zone. So if you're a bull, let's go all the way back to the first of the month. Plan A was to buy this up. Plan B is to buy this up if you're a bull. Right now we're moving sideways and consolidating. So let's filter out the bigger move. Let's filter out this monthly. Let's just go back to with the market conditions we have now, this week and last week and the week before and the week before that. If you're a bull, where do we buy? Looking at this chart. If you're a bull this week and last week and the week before and the week before that, where do you buy? Support. It's range bound. Support. Right? Bears sell here, 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 here. They also have permission to use this pivot because it's part of the resistance. That's market resistance. This is price resistance. This is market resistance. So this whole area. So here, 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 all sell, 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 so sell, sell, sell. Okay, now buyers, price, 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 market. This is market. This is price. Market price. So it's all support. So right. So we're just kind of more of the same. Yeah, it did kind of stretch down, kind of an Arctic turtle scenario, stretched out to get that monthly. Could be bullish. I mean, that is very bullish. Okay, and up here is very bearish. So you can just keep buying there if you're a bull, or selling there if you're a bear. I don't recommend. I'm not the type of person that recommends doing both. But I want you to pick a bias and stick with the bias and buy where you're supposed to buy, sell where you're supposed to sell. This kind of stuff. But I did want to point out that the fact that it came down here is a long-term buy zone. Now this is weekly buy zone, weekly sell zone, right? Weekly sell zone, weekly buy zone. weekly sell zone, weekly buy zone, weekly sell zone, monthly buy zone. Right? That's a big deal. The alarms are going off. Bing, 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 bing. Right? So that's a big deal. Doesn't mean it's going to break out, but it helps. And of course, you know my bias, right? I believe on a cyclical nature, which is a fundamental part of my fundamental bias-y. I believe we are going up, and I think we're going here, maybe not this month, but certainly by next month. And you'll notice there's nothing technical here besides price and pivots, right? Those are my leading indicators. But if I strip out my leading indicators, let's strip this out now. And I say like this. Let's do it this way. Okay? Where are we going to be in 6 weeks? Tell me. And it gets a lot less certain. Right? Because now you're like, well, maybe here. Okay? Notice it doesn't give you a sense of time. And then what about up here? Maybe here? But like when? This month? Next month? That's where pivots really come in handy, right? So you're like, well. So then maybe you're like, Wayne, why don't you use, Fibonacci? Okay. All right, we'll use Fibonacci. So I'll say, okay, that's a 382, and that's going to expand up to the 1618, which is actually here. And then if you get a rockin' awesome move, you're going to get to the 200. Oh, well, I already said all that. Okay. So that 382 predicts a 1618. Okay. Good. Nice. All right. So it can be done. But then I do it this way and I say, well, this is also very helpful to say, oh, well, there's the long-term target right there. Boom. And it's basically the same thing, but it's a lot less subjective. I didn't need a 382. I didn't need a 1618. I didn't even need to measure this out. But you notice it's exactly the same. Oh, my gosh! How did that happen? Oh, well, maybe it does help to know the calculus. All right, so you need some calculus. Nah, you don't need the calculus. But you need analysis. You need to be the one that can break this down and show 3 different ways why we're going there if we're a bull. Now, do we know if the market is bullish? Do we know the rest of the world is bullish? No, we don't. We don't know any of that. But you should know how the vast majority of those who are bulls are planning their trades. And if you can figure that out, you're probably going to do just fine as a currency trader. But if you sit down every day and wing it, that means you're not a bull. That means that you're not a bear. That means you're a pig. And pigs, my friend, get slaughtered. Bacon for dinner. Peace on earth. May the pips be with you. May our profits be above average. Oops, where's my mouse? Thanks for hanging with me today with my dead mouse. And I've been up for hours and doing this and doing that. And I had all kinds of things going wrong today. But so far, you're the highlight of my day. I appreciate you. Thank you for everything you do. If this was a mediocre webinar, I really apologize. Maybe I'll do better tomorrow. So, thank you for being a client of Traders Way. If you haven't done so, please visit tradersway.com. Make sure you subscribe, like, and in about 30 seconds, maybe even 15 seconds, you can refresh this page and leave comments below. I will read them. Okay? See you tomorrow. Have a fantastic